Good morning, students. So we have one more video on cash from operating activities. Actually, before working capital changes we have done. Now we will be learning about working capital changes. So what is the meaning of working capital? It is nothing but current assets minus current liability. And you know our current assets from schedule 3, you remember, it is consisting of CIT CSO, that is current investment, inventories, T for trade receivables, cash and cash equivalents, short-term loans and advances, and other current assets. Now, in cash flow statement, we will not take all the items of current assets because in this operating activities, because cash and cash equivalent goes in cash and cash equivalent, cash in hand, closing cash in hand, opening cash in hand in that place, and short-term loans and advances is also taken under cash and cash equivalent. So what we have left with? We are left with current investment. Now remember students, current investment doesn't mean marketable securities and short-term investment because they are included in cash and cash equivalents. Inventory, that is closing stock, and trade receivables, which includes debtors and bills receivable, and other current assets like prepaid expenses or income received in income receivable. These are other current assets. Now, effect of change in current assets and current liabilities. First of all, current assets we will learn. What is the effect of change in current asset? Increase in current asset means more cash is used or invested in assets. Therefore, it is an outflow of cash and cash equivalents. Whereas decrease in cash asset, current assets means opposite. That is inflow of cash and cash equivalent takes place. Let's understand how it happens. For example, suppose debtors reduce. That means what? My current asset has reduced. So if current asset has reduced, why? Because we have received the payment from the debtors. That means it is an inflow of cash. That means decrease in current asset results to inflow of cash. And inflow of cash means you have to add in cash flow statement. Because inflow will be added and outflow will be subtracted. Remember it. Similarly, suppose we have made a payment. Suppose inventory means we have made a payment to buy inventories. Now it is an increase in asset, increase in current assets, excepting cash and cash equivalent I am talking about. Inventory has increased, and when increase in inventory takes place, then what is happening? Our cash is going out. Outflow of cash is taking place. And hence, it is also resulting to decrease in cash. That means it will be subtracted. Current asset, whenever increases in the business, there is an outflow of cash and cash equivalent. And current assets, whenever decreases in the business, excepting cash, so there will be an inflow of cash. That we have understand by these two examples. Now, now think about the current liabilities. You remember your short acronym for current liabilities in Schedule 3, STOS, short-term borrowings, trade payables, other current liabilities, and short-term provisions. Remember, short-term provisions is a non-cash item. There is no inflow or outflow of cash, hence not taken in cash flow statement under current liabilities. Under this part, we are not taking it. Moreover, this other current liabilities, this one, short-term borrowings, it includes bank overdraft and cash credit, and they are the item of financing activity and are not taken in cash and cash. They are taken in financing activity, and hence they are taken in financing activity, and hence they are not to be treated over here. They are taken in financing activity. Financing. Financing activity. And are not included over here. Other current liabilities like outstanding expenses, income received in advance, we will be dealing it over here. Now, what we will be doing? Suppose one example, we are making a payment to creditors. So what will happen when we make payment to creditors? Our cash is going out. That means our creditors when reducing, that means when liability is reducing, this creditors is reducing, then what is happening? Outflow of cash. Hence, we need to subtract this. Similarly, when there is an increment of loan, suppose if the loan value has increased, that results in what? That results in increase in cash and increase in cash and liability. Loan is nothing but a liability. So whenever liability increases, it's a inflow of cash. Decrease in current liability. So it results in so this one is results in outflow of cash. Achha. Similarly, as I gave you the example, if loan taken, then inflow takes place. Inflow takes place. Then inflow takes place. Hence we add. Hence we add in operating activities. See, to summarize, we can say we add when decrease in current assets takes place, and we add when increase in current liability takes place. Similarly, we subtract when increase in current asset takes place and decrease in current liability takes place. If you remember in this way, add ICL, L for liability, L for somebody, current liability. So current liability wherever increases, we will add. And we will do vice versa everywhere. Current liability decreases, we will subtract. Current asset decreases, we will add. Current asset increases, we will subtract. Let's do a sum to understand everything. So let's do a sum, students. Let's do a sum. Yes, let's do a sum. Calculate cash from operation. Operating profit before working capital changes is given 1,20,000. And this is the sum. Trade payable is given, trade receivables, prepaid expense, outstanding expense, inventory, bank overdraft, cash paid, current investment, accrued income, income received in advance, cash in hand, short term loan. All the liabilities are given over here. All the current liabilities and current assets. See over here, we will be writing like this particulars amount because this is the particulars for the cash flow statement. Operating profit before working capital changes given in the sum 1,20,000. We have to write add increase in current liability and decrease in current assets. So we will see which are the current liabilities which are increasing and which are the current assets which are decreasing. Trade receivable is no doubt a current asset, and there is a reduction in trade receivables. If you will notice, there is a reduction in trade receivables. How much was the trade receivables? Trade receivables previously was 15,000, and in 2016 it became 12,000. So 3,000 reduction. So 3,000 is reduced. Reduced means I told you there is an inflow of cash, and hence it will be added. Similarly, trade payables. Trade payables in 15 it was 3,000, and now it has become 5,000. So increase. Increase means you have to add. Trade payables added. Means we have received the money. Money is inflowing, money is coming in. Similarly, prepaid expense, it is 2015 3,000 and 2016 null. And it has reduced, so add. Similarly, outstanding expenses is increasing by 2,000. So we are adding outstanding expense. Inventories is reducing by 5,000. From 20,000 to become 15,000. So we are adding. So remember, increase in current liability we are adding, decrease in current asset we are subtracting. So all of them we have added, we got 16,000. Similarly, increase in current assets and decrease in current liabilities. What happens now? Current investment. Current investment, what is happening? It is increasing. It is increasing by 3,000. See, previously it was 8,000. Now it became previously current investment, previously 8,000, now 7,000. So it has actually, okay, current investment has reduced. Oh, current investment I have done as added. One sec, students. Current investment has reduced. Achha, one more thing, this bank overdraft and cash credit will not come over here because both of them will be taken in the cash and cash equivalent. Okay. Cash and cash equivalent. Accrued income. Accrued income is reduced by, accrued income is what? Accrued income is asset. An asset when increases will be subtracted. Accrued income has increased by 3,000. Okay. Accrued income has increased by 3,000, and we have taken current investment also reduced uh, by 4,000. Current investment is increased from 8,000 became 12,000. So we will do subtraction of current investment. Current investment will come over here, and we will take subtraction. We will do subtraction. So this will be 4,000. Accrued income is 3,000. That we need to subtract. Because accrued income is also increasing. It is an asset increase. We'll subtract. And one more thing is there, income received in advance. It was 7,000 2015. 18 there was nothing. 18 there was nothing. That means what? It has 2015 it is 7,000. 2016 it is nothing. Means current year nothing. Current year nothing means it has reduced. Income received in advance is a liability. Liability reduced means subtract. 7,000 subtract. 7, 3, 10, 10, 4, 14. So 14,000 we have to subtract, students. 14,000 subtract. So 16,000 total added, 14,000 subtracted. So it becomes 2,000 net figure which we have to add with current profit before working capital changes. The working capital changes is 2,000. When we have added, we got cash from operation, that is 1,17,000. Students, remember cash in hand and cash equivalent also. Cash in hand is a cash equivalent, so we have not taken it over here. Short-term loan, bank overdraft, and cash credit are shown under financing activities, so we have not taken under operating activities. So this much you remember, and you can easily do this sum. If you understand, please do this homework and send it to me by any options, WhatsApp, channel, or through email. Thank you, students. Some please do. Thank you, students.